Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, unfortunately, a big red day. The SPY and the QQQ taking a little bit of a bath. The SPY down about 0.5%, the Q's down over 1%, but it was a lot worse throughout the day. It all started early this morning when, unfortunately, Netflix weighed on the indexes and weighed on the growth sentiment overall for tech names. The company started off the day down about 7.5% and kind of unraveled thereafter. And it was not only limited to Netflix. A lot of the big tech names were very, very soft all throughout the day. What made it worse is midway through the morning, around 11:30 a.m., we got one piece of news out of the Trump administration. This one, Trump administration considering curbs on exports to China made with U.S. software. Of course, that did not help technology stocks, which are already a little bit soft on the day, and the damage just continued thereafter. Now, luckily, the bulls were able to play a bit of defense into the afternoon. We got a nice rally here in the early hours of the afternoon on the SPY and the QQQs as well. But the damage across the board has already been done. Many of your growth names suffering a similar fate from yesterday, right? Where they were all down 5, 6, 7, 8, 9, 10+%. Today, again, another very bad day for some of your high-flying growth names that really had a tremendous September and October. And you know how bad it was, right? APLD, this $9 billion company, had an amazing piece of news in the morning. And it was this one right here, signing a $5 billion AI infrastructure lease with a hyperscaler. This is the type of news where just 2-3 weeks ago at this point, this name would have probably been up 10, 15, maybe even 20%. As we know, most of those names, especially the neo cloud providers, right, were running really hot on all those deals of all those partnerships with big brands and big technology companies, of course. Unfortunately, today, APLD came out with this news, which is literally a deal for half of their market cap, and the stock did not even move. It just kept moving down and down and down, which is why you know right now that sentiment, especially sentiment towards growth, is somewhat soft. And especially as we were discussing narratives over the course of the past week, I kept telling you guys, right? The markets are in a very precarious situation right now. We have long-term bullish tailwinds in terms of decent macro and very decent earnings. But if they choose on random days to bring back some of the negative catalysts, it's going to be tough throughout that day to really bring the markets back in a bullish fashion. So in today's video, guys, we're going to take a look at a few key things together. Number one, I have one company earnings prepared for you guys, and that is going to, of course, be Tesla. Now, shout out to all the other companies today that reported earnings. We will be able to catch up on some of them tomorrow and into the Friday session. But tonight, I'm a little bit tight on time, so I do apologize, which is also why I'm uploading the video a little bit late. But we'll be taking a look at Tesla, which is currently down about 4% in the after hour for their earnings. Thereafter, we will do our major technical analysis rundown of all our major market indexes, check on the rotation, where is it lacking? Then we're going to do the same thing across our big tech name list here as well. A lot of these big tech names, I'll remind you, have earnings next week, right? Next week's going to be a huge week for the markets. You got Meta, Microsoft, Alphabet, you got Apple, you got Amazon, and so many other fan favorite tech names as well. That's probably going to be the biggest week for the entire season. So we'll take a look at these big tech names and how they're shaping up into their earnings. Unfortunately, Netflix coming down 10% on the day just because of that Brazilian tax implication that we covered yesterday on the channel. But their earnings, by large and by far, were very good, especially in terms of revenue growth. So we will see, how are these companies set up into their own earnings coming into the next few weeks of time? And then at the very end of the video, yes, of course, we will do a quick recap of the biggest gainers and losers of the day. Many of your biggest losers of the day have been the biggest losers for like a week straight at this point in time. A few new entrants to this category, such as BMNR, but still, it has not been a very good period of time for a lot of fan favorite growth names out there. And then we'll also take a look at some of the names that actually made it out of today alive. Some names, several names, as a matter of fact, having a very decent day. So we'll check on this list and see if we can derive any swing trade opportunities from there. And that's going to be it for today's video. So let's jump right into the action, shall we? The SPY down about 0.52%. The Qs down almost 1% on the day. And you could take a look at the heat map. It was not a very pretty day, of course, right? Most of big tech, very soft. And we did have some gains from Microsoft, some gains from Google as well. Shout out to Google, by the way. They got one piece of news today, which was very bullish. CEO Sundar Pichai coming on to Twitter very early this morning with new breakthroughs in quantum computing. Very, very nice breakthroughs by them. There's their good old quantum computer. It's absolutely massive. The first ever verifiable quantum advantage. And even Elon Musk inputting his own statement down below here, Congrats! Looks like quantum computing is becoming relevant, of course, in reference to the fact that quantum computing is very nice technology, but it's still years and years away. But Google having a tremendous breakthrough today, which did help keep up their share price throughout the session. Now, in terms of infrastructure and even software today, very soft, guys. Extremely soft price action right there. Soft price action in financials as well, pretty much all across the board. Healthcare, actually not that bad of a day. Medical devices led by ISRG had a very good day, and Eli Lilly coming up almost 2%. So that did wonders in lifting up the ETF. The bottom half of the market, though, a little bit mixed. Obviously, when you have a growth crush, people did pivot a little bit into value, but I wouldn't say it was super broad-based. Names like Coca-Cola and Pepsi coming down, and the index here not doing too poorly. Industrials coming down heavily. A lot of those associated with the data center build-out and power requirements, they were down on the day as that narrative continues to take a little bit of a bath right now. And the bottom half of the market down here, interest rate sensitives, were not too bad because yields did come down over the course of the day. On your one-day relative, you can see that even better to where energy was actually your best performer of the day. Consumer defensives followed second, real estate and healthcare. Everything else to the downside led by industrials and technology, more specifically, the AI-centric names of those niches. 1 week relative, guys, you're still roughly mixed here, but you can tell some of the losses accelerating to the downside. Basic materials, utilities, not a very good week for utilities at all, but they deserve a little bit of a breather, guys. Utilities really carried over the course of the last, let's call it month and a half, and now just going for a possible weekly retracement down. Very healthy price action, in my opinion. And then to the upside, we still have some winners: healthcare, energy, real estate, cyclicals, and defensives. Technology buried right there in the middle. Unfortunately, red on a 1 week relative basis. So before we get into more of our technical analysis, let's dive deep into the Tesla earnings and derive why the company is currently down right now, about 4% in the after hours. I'll remind you, the expected move for Tesla today was about 8%. So this is a bit of an underwhelming move. You would expect to see Tesla move a lot more to the upside or to the downside. And to be quite frank with you, their earnings were decent. They weren't terrible, such as last quarter's earnings were. They weren't fantastic. They were decent. They decent. They missed on a few key metrics, but they beat on other metrics as well. Taking a look here at the headline numbers, 10% miss on EPS, unfortunately, and a 5.86% beat on revenue. This is actually Tesla's best quarterly revenue ever, if you can believe it. It's a very strong number right there. Some of the easiest numbers right now, revenue was up 12% year over year. That was very decent. Auto revenues in relation to deliveries was actually down 1% year over year, sadly. Operating margin, after bottoming 2 quarters ago, which was Tesla's worst quarter ever, arguably. Well, I mean, I guess since they've been profitable, now nicely on the upswing. Not great, not fantastic numbers, but still, you can clearly tell there was a bottoming out process there. Storage deployed is arguably the highlight of the entire quarter. 12.5 gigawatt hours deployed, 81% year over year. And this is a very decent margin business for Tesla, which is one of the reasons why operating margin was going higher despite that margin being compressed in the auto segment. Storage deployed and Tesla services really pulling ahead. Operating income, unfortunately, down 40% year over year, but as you can see, it is on an upswing from the lows that we had just 2 quarters ago, and much better than even last quarter as well. However, Tesla revenues, guys, top line revenues have been flat for a while, and this has been a problem for the company. If you take a look at this, Tesla total revenues, this is measured on a last 12-month basis. You can see that for the most part, guys, it kind of topped out in late 2023, and we're still not back in terms of trailing 12-month numbers above prior highs. Now, it's been stagnating. We haven't really been dropping that much, but it has not been accelerating. And this has been one of the problems that certain folks have been having with Tesla over the course of the past 1.5 to 2 years. Let's move into the article. Tesla reports revenue growth after 2 down quarters. Why the stock is falling. And this is true. The revenue growth was actually not that bad, actually coming in and beating the expectations by 6%, as we said. Automotive revenue increased 6% to $21.2 billion from the $20 billion in the year ago period. Net income, however, fell 37% to $1.37 billion. Now, they'll focus a lot on the fact that net income did fall, but I will remind you, it's on an upswing. When you measure over a trailing 12-month basis, right? Obviously, if we pick and choose quarters from 2024, well, the net income is going to be down, operating income is going to be down. But is it better than 2 quarters ago and even 1 quarter ago? Yes. So although margins are down, they're not the worst they have been in the course of the past year. The profit drop reflected lower EV prices and a 50% increase in operating expenses, which the company said was in part due to AI and other R&D projects. So it's nice to see them investing in the business. They definitely have the cash to do it, and we'll get into how much cash they have later on in the analysis. The end of the quarter coincided with the expiration of federal tax credits for electric vehicles, which were, of course, eliminated by President Trump's spending bill. That pulled sales forward into the quarter as consumers rushed to take advantage of the incentive before it went away. So I guess the true test for Tesla in terms of the auto business is going to be this quarter, Q4. Are customers still going to be buying the Model 3 and Model Y at such a fast pace now that they no longer have the EV regulatory credits? Revenue from automotive regulatory credits in the quarter fell 44% to $417 million from $739 million. This has always been a bright spot for Tesla, but of course, unfortunately, President Trump killed those credits, and now you will see these dwindle down quarter over quarter as we move forward into the end of the year. Even with the return of overall growth, Tesla's third quarter was marked by a continuing sales slump in Europe, driven partly by consumer backlash against Musk, his incendiary political rhetoric and activism. Now, obviously, he doesn't do that anymore, but we're referencing the election cycle with President Trump last year and earlier into this year as well, before they had a falling out, as well by competition from EV makers like Volkswagen and BYD. We cannot forget, man, BYD is big, up and coming in Asia and especially in Europe as well. Analysts are waiting to hear for what the company projects for demand. Tesla still didn't give volume-specific guidance in its shareholder deck, but it said it's still aiming to start volume production of the Cybercab, the heavy-duty electric semi-truck, and new battery energy storage system called Megapack 3 in 2026. Tesla also said it's now building out the first-generation production lines for the company's humanoid Optimus robots, which is very interesting, of course. Musk said on the earnings call that the company expects to show its Optimus V3 in the first quarter. Instead of promising to deliver a certain number of EVs and energy products by the year end, Tesla said it is difficult to measure the impacts of shifting global trade and fiscal policies on the automotive and energy supply chains, our cost structure and demand for durable goods, and related services. Tesla getting very corporate with this statement. I haven't seen Tesla issue such a corporate statement in a very long time. So I guess they're kind of covering their bases, right? Tesla said it grew its service area and fleet count for its robotaxi service in Austin, which involves safety drivers on board, and launched its Bay Area ride-hailing service. They are actually scaling robotaxis quite nicely, not as fast as certain people would have hoped, but nicely in the past 6 months. The company said it's obtaining data that will allow it to quickly scale to other cities in the future with what it's calling a universal model. Earlier this month, Tesla reported deliveries of just about 497,000 vehicles for the third quarter, which was a record, on total production of 447,000 vehicles. However, through the first 3 quarters, deliveries stood around 1.2 million. And we'll get into Tesla's own slide deck and show how flat those deliveries have been. And that's also in relation to flat total revenues as well, right? So the company's stagnating just a little bit. The company's biggest growth engine in the quarter was its energy generation business, which saw revenue jump 44%, of course. Now, lastly, Musk's AI startup, xAI, which he started in 2023, has been a big buyer of Tesla's energy products. In its 2024 annual report, Tesla said xAI incurred expenses of about $200 million for the year and $37 million through February of 2025, and most of that was for Tesla's Megapack products. So Tesla remains the company. We're going to get into some slides, but just to do a recap, guys, right? I have it all on the screen, and I've had this on the screen for now several quarters. The Tesla story, at least in the last year, has been one of short-term negatives, which the article highlighted, slowing sales growth worldwide, talking about sales growth number. They're still selling, but the growth of those sales has been coming down. We have also talked about price cuts and incentives, and now we do no longer have the incentive of the tax credits for consumers. We have the China price wars with BYD making up a lot of ground in Europe and especially certain parts of Asia as well. And then the article also highlighted the brand perception. These are what's known as the short-term negatives for the business. However, we also have several long-term positives, which is what the average Tesla shareholder always focuses on. Solving FSD and the robotaxis could possibly be a multi-trillion-dollar business. They do have the most extensive charging network worldwide. That has not changed and will not change. they have one of the most advanced robotics divisions worldwide, which is why they're making such good progress on Optimus and on Dojo. They have solar and energy storage expansion long term, and we saw that this quarter again, deploying 12.5 gigawatt hours. They are only one of 3 worldwide positive free cash flow EV makers, and this quarter they showed again that even though they have thin margins, they did pump out $4 billion in free cash flow, which was one of their best quarters in recent memory. And of course, they have cost of goods sold efficiency offsetting the price cuts somewhat, meaning Tesla is really good at bringing down the cost per vehicle sold. So Tesla's story in the last year has been one of short-term negatives versus the long-term positives. With that in mind, let's continue. Some more numbers here highlighting Tesla's dwindling margins over the course of the past year. Net income, the blue columns, you can see clearly coming down. This is trailing 12-month data. And adjusted earnings before interest, taxes, depreciation, and amortization, otherwise known as EBITDA, also making its way to the downside. Now, that being said, there were several nice highlights for the quarter. Record free cash flow of nearly $4 billion in the quarter, which was very good, and an increase in cash of $4.9 billion to a total of $41.6 billion in cash. They only have about $7.5 billion of debt, so the company is definitely well capitalized to make it through this margin compression cycle for the business. At least there is that, right? But some of the bullishness somewhat stops there, right? If we take a look at, total revenues, they were up 12% for the year, but automotive still a little bit soft here, guys, only 6%, right? Where the big bump came from was definitely energy storage. And then you also had services up 25% year over year as well. Net income has been a little bit, let's just say timid for the company, as we saw in this chart right there. But if you do focus on the free cash flow, this is a big highlight, man. Take a look at Q3 2024 through Q3 of this year. You can see what happened to free cash flow. You had compression from 2.7 to 2, down to 600 million, down to 150 million, and now pumping out a beautiful quarter, almost $4 billion in free cash flow. Of course, I've already said that the energy business and services was a very big contributor to those cash flow amounts. Not too bad there. They also have other decent factors, such as your deliveries finally up 7% year over year, which was good, but we can clearly see there was a slowing effect 2 quarters ago. Of course, this had to do with the Model 3 and Model Y refreshes, which were ongoing at many Tesla factories worldwide. And now that production is fully back up and operational, and you also had a highlight of the pull forward of demand through the quarter, we're back to 497. So not that bad. Has Tesla's delivery cycle bottomed out? Possibly. It's tough to determine, right? Because worldwide automobile sales are still very soft because interest rates worldwide are still roughly quite high. And a lot of people just bought all their cars back 2-3 years ago at this point in time. Now you can see the market share of Tesla vehicles by region right here. You can see that over the past 2 years, it's been flatlining, dare I say, declining as well. Well, not dare I say, you can clearly see it in the numbers here. Europe, US, Canada, and also China has been coming down. That's not necessarily maybe because people just don't want Teslas anymore. It's because there's just a lot more options available on the market right now in terms of other EV makers, right? Every single other automaker now has a whole suite of EV cars, which was not the case just about 4 or 5 years ago at this point, when Tesla really had the big first mover advantage. One last highlight that we are going to talk about, of course, is the FSD miles on version 12 and beyond. The versions that they're on right now, version 14, I believe, is pretty solid, a pretty solid release. Now, Tesla did have certain hiccups with the robo-taxis upon release a couple months ago. You can obviously see those highlights in videos on YouTube and Twitter as well, but they've been making further and further progress on their robo-taxi network, now expanding into California as well, with a lot of miles driven, of course. And lastly, but not least, the highlight of the company for the quarter, definitely the energy and services segment, of course. Very strong momentum here. Energy and services trailing 12-month revenues and gross profit, very solid. And the energy business, of course, really ramping up in terms of that gigawatt hours deployed. So that is pretty much everything that we had for Tesla, guys. Not as bad as a quarter as 2 quarters ago, or dare I even say last quarter as well. And if I'm going to be quite honest with you, the new Model 3 and the new Model Y, they look quite good, and they are saving a bit of money for the consumer as well, as they are more affordable models. Now, that being said, we did this midway through the analysis a few minutes ago, but you just always have to remember, guys, if you are in Tesla, it's a battle between the short-term negatives and the long-term positives. Arguably, the long-term positives have much greater ramp capacity than the automobile business alone. And that has always been the argument for Tesla, for the bullish case for Tesla, because the argument is definitely not the fact that the company is cheaply valued right now. As a matter of fact, it is expensive by any and all metrics. Forward price to earnings at 420 right now, you're at 172. A forward PEG ratio, you're at a 4.65, and that is in spite of them being able to grow revenue 18% per year through 2028 and 37% year gains on EPS on average through 2028 as well. Still, PEG and PE very high, and price to sales also very high, 13.2. So by all metrics, Tesla is very expensive if you consider it to be a pure play automobile company, of course. If you are trying to factor in some of the revenue streams from these long-term positives that Tesla has, then you can make an argument that the company may just be cheap in relation to the forward revenues that the company will be able to bring in. However, if we take a look at some of the analyst consensus models, you will see that that revenue will not really start to ramp up much before 2028. 2028 to 2030 is supposed to be the big ramp years where robotaxi will finally be at scale. We're talking big scale here, possibly across North America and other European and Asian markets. And also when Tesla will be having the benefit of possibly Optimus robot sales and other parts of the business finally getting up to scale as well. Energy side of things too. So Tesla, in my opinion, is a long-term story. If you're buying the stock up here, you have to have the long-term vision. If not, the valuation does not make sense. If we do pull back here, 400 down to about 380, you might see me trying this one for a bit of a swing trade, as the technicals would look pretty good for a monthly breakout retest of the all-time high range for possible further trend continuation into Q4 and into Q1, where Tesla's guidance should be a little bit better and where their short-term negatives should be a little less, well, negative. So that's pretty much everything we had for Tesla earnings. Spend a bit more time on that one because I know it's a big one for retail. So hopefully I was able to present a fair and objective analysis of the company. I am still a Tesla shareholder and I will be holding my Tesla shares for the long-term vision, but I have taken, full disclaimer, from my initial investments in 2018, 2019, I have taken a ton of profit on this company so far, but I do have certain core shares that I will not be selling as I do seek to, stay in for the ride for the long-term positives as well. So that's everything we had for the earnings today, guys. Hopefully you enjoyed. Now, let's jump right into the chart, shall we? Okay, so first off, let's take a look at the SPY, and you guys will see really not much has changed, even with today's very volatile day of price action. Let me just move myself over. Let's jump right into it. So the SPY still in a very nice daily uptrend right now, back testing the EMAs and filling the gap that was left behind from Friday to the Monday session. That being said, the line in the sand is down here, 657.3 is your line in the sand. If you lose that, unfortunately, you lose the daily uptrend, and you could come back down and revisit the support range down here, 650 down about 645. So pay attention, guys. Next week is going to be the make or break week, in my opinion, for this trading range. That being said, next week is a very busy week. We have all of the corporate earnings that we talked about, all the big tech earnings as well. We have Jerome Powell coming with an interest rate decision. The consensus is still for a cut, 99% chance of a 0.25 basis point cut. And there are rather 0.25% cut. And thereafter, we additionally have the infamous President Trump meeting with President Xi in South Korea. So next week is going to be extremely busy and, in my opinion, the more volatile week. And that's when we could see some breaks of the trading range. Perhaps we'll see how we set up into next week. But as of right now, we're not looking terrible, but you can clearly see there's a narrative going on, right? A big growth crush in the market. Good thing that big tech is holding up the way they are. If not, we would probably be considerably lower. And you do have some inputs here from healthcare, but overall, right? The earnings so far, at least the ones that we've covered on the channel, most of the financials and other companies, they've had good earnings, right? We're not hearing about massive layoffs. We're not hearing about massive consumer troubles. They've been having good earnings. So long-term fundamentals will prevail, but it's going to be a bumpy ride through these narratives and through this volatility. Moving into our QQQs right now. So the Qs kind of set up exactly the same. Line in the sand level remains down here at about 596. That being said, still in a daily uptrend, trying to set some higher lows and trying to go for the uptrend break of the new all-time highs. That being said, if softness continues in the market and if we just cannot get over this negative growth sentiment, well, we may come back down and challenge our support area below, which is 595 down to about 590. And beyond that, you would just be looking for a bit more compression here and a bit more weekly consolidation in the markets, which would not be the worst thing. The monthly timeframes need it, but you're going to need something big in terms of continued negative catalyst to bring the market down here. Because I'll remind you, the macro tailwinds right now are quite positive. We obviously don't have the jobs report just yet, but we do have still very bullish tailwinds, and a lot of companies are beating earnings. 85% of companies that are reported so far have posted better than expected revenues and good guidance. So it's tough. It's really tough to send this market flying to the downside unless you can really hammer some of these short-term bearish narratives home. Moving on to financials right now. Financials have been notoriously soft, and today was another example of that. It has been a daily downtrend, and the daily downtrend at this point is continuing, right? That's the expectation. Now, that being said, the bulls have a chance at trying to go for the daily uptrend sweep, but they have to get it in. They have to get above this guy right here, 53.31 to 52.85. Big resistance, big support, now big resistance for the bulls as well. If we get trapped down here around support, it's not the worst thing in the world. It's a very big area, 52 down to $50. And at that point, you would just be looking for a bit of monthly consolidation. The monthly chart is the one that makes the most sense to me. And I will be exploring further opportunities to pick up some financial plays as we move possibly further into that consolidation if they're just not able to keep it up. Moving into healthcare right now, healthcare actually having a very decent day. Your best performer of the day, of course, the daily looking solid, guys, right? Any move lower at this point, if we get rejected from resistance, which is 148 down to this area, 145, you're looking for a new daily higher low and possibly trend continuation for the two-step crack of the resistance range if they cannot get it done in one clean shot. The clearest time frame for me remains the weekly, where we are just going for a very nice leg of weekly expansion with your weekly higher lows, of course, buried down below here, 141.26. Full disclaimer, I did take profit almost at the high of the day on one of my XLV calls. You might remember I picked up some XLV calls at these lows down here. This is take profit number one area for me. The second area of take profit will take a lot more time to get to, but it will be the all-time high. So that one was a very nice swing trade. Hopefully you guys were able to make some nice profits on this move as well. Moving on to SMH right now. And by the way, some healthcare names, man, they're set up nicely. Look at this setup on Eli Lilly. Not too bad, right? So some healthcare names, if you know where to look, have some pretty decent setups for some swing trades possibly. Moving on to SMH right now. SMH down 2%. Not the best day at all for a lot of major players out there. And even LRCX. LRCX had earnings after the close. They had really strong earnings. Can you guys guess what happened in the after hours? Well, of course, the company went down, right? Because it's just ran so much. This is TSM all over again in a nutshell, pretty much. And even maybe ASML as well, right? All the semiconductor companies so far have reported very solid earnings, but none of them have really gone up after earnings, right? Just because they've ran so much. So semiconductors might still be getting a little bit tired here. The weekly, I will remind you, we are quite extended on the RSI. The daily bulls are losing a bit of ground here. They almost lost a 12 EMA. They're trying to hold it back, trying to go for the daily higher lows, and trying to go for the trend continuation. If we cannot get it done and crack the low of the China candle, right? This is the China tariff candle. Crack that low, that's a daily downtrend, and that is unfortunately the end of the weekly push higher, and you might just be looking for very healthy weekly consolidation. Something like back here, right? We can even just move sideways in some form of a tight range with a bearish leaning bias, and that would not be the worst thing because we are trading relatively extended right now. So we will see what happens to semiconductor plays, but suffice to say, a lot of them have ran considerably without much consolidation, and consolidation can be expected eventually, guys. Micron, all the way up here. ASML, all the way up here. I just showed you guys LRCX, all the way up here. AMD, all the way up here as well. All of these plays have ran tremendously in the past month and a half without much consolidation. So if you do see some consolidation, do not act surprised. It will just be healthy consolidation in my opinion. And now lastly, moving on to the Russell. The Russell suffering its decline today of about 1.48%. Not terrible, but they did crack the line in the sand, guys, right? You might just be looking at a daily downtrend. If the growth scare or consolidation, whatever you want to call it, right? If all this stuff continues into the next few days, you will probably see the Russell lose some ground and start losing the levels as well. We will see what happens. The bulls are trying to play some defense. You got to give it to them. But if we unwind, we are going for the infamous phase of weekly consolidation. It's been a very nice run from July, but you can see there's a little bit of tibbiness here at the tops, right? Not able to break above these tops. If we get a pullback, well, we might look to go shopping around the 231 to 225 location, which would be a nice breakout retest area on the weekly, but also on the monthly timeframes as well. That would be a very nice monthly cup and handle, very strong pattern formation coming back into the highs of 2021 and the highs established earlier this year and also late 2024. So they're also not looking too bad, but might just have to be a bit more patient for the pullback for the best entry possible. Moving on into the VIX. The VIX holding high today, of course, a lot of volatility in the markets all throughout the day. They actually pushed all the way up to 21 before retracing a little bit. Still a very good environment, in my opinion, to be selling options, selling covered calls on some trades that you might be up tremendously on just to protect those gains, but also selling puts on some of the companies that are making their way down through the levels very rapidly. You can get some very good distance and some very good premiums on some of your favorite companies. So just keep that in mind when you're looking at the VIX. High volatility does favor options sellers, not option buyers. If we move into next gold, because I'm not going to be covering the yields. I mean, they moved down today. TLT moved up, but nothing notable there in terms of gaining or losing levels. If we take a look at gold, right? Gold also very soft. And we were talking about this yesterday after this big candle close right here. We were saying, listen, if they pull back any more from the most recent daily upswing, right? Beautiful daily uptrend. Beautiful blow off top as well. Now you are facing a 78% retracement. It is excessively difficult for any bulls, whether it's in tech, whether it's in gold, whatever. When you see a 78% retracement of your most recent move, that means the bulls are kind of out of steam and the bears are just rolling them over right now. It is very, very hard to get a V-shaped recovery and blow through the top again after you have a 78% retracement. If anything, right? If you're very bullish on this one, what you need to see right now is the establishment of a tightening range, because the expectation after a 78% retracement, at least every single time that I've learned this stuff, right, is always for a lower high into lower low into daily downtrend formation into a little bit of weekly consolidation. And that is definitely what the weekly candle looks like now. We're not going to call it just yet, but if it closes the week somehow like this, right, that's a very big engulfing candle, guys, and also synonymous with a big supply zone being created in the price, and you might just see a bit of price action to the downside. Am I playing this one at all right now? No, I'm going to wait and see. I need to have better established price action levels. You need to give me something to trade off of, because right now, unfortunately, you are simply just guessing, right? The move was very extended, and now we have to see who establishes short-term control and where do we stop and where can we form some nice basing areas of support to build some better risk to reward trades. Moving on to Bitcoin and Ethereum right now. So Bitcoin, unfortunately, not the best day for Bitcoin, but didn't really go anywhere, right? That being said, daily downtrend underway, lower high established, and we will see if the bears have it in them to crack our lows down here, 1037, and just go into this perpetual daily downtrend. Overall, though, guys, it's not looking terrible. This is a big area of support, 107 down to about 99, 100. Big prior resistance, current support for the markets again. And the bulls seem to be playing some nice defense, at least for now. The best time frame, in my opinion, is the monthly. Bitcoin, just in a 4-month consolidation phase. They've done this many times before throughout this rally, right? Nice move. 4 months of consolidation. Nice move. 7 months of consolidation. Nice move. 4. Nice move. And now number 4 as well. Might just be coming into the 12 EMA. So I am accumulating a bit of Bitcoin here and also enjoying the time with the volatility to sell some put options under the market as well. Moving into Ethereum, a bit of the same analysis there. Not doing too much over the course of the day, but at least not losing the critical line in the sand $3,700 level. The bears are looking to go for it, but the bulls are playing really solid defense, and that's because it's a very big level. 4,000 down to 3,700 is no joke, man. It's prior resistance from there, and now support for the markets as well. However, the bears are in control of this medium-term time frame, and we might just be looking for a bit more monthly consolidation, right? We don't know if it's going to stop here or down here, but it's going to stop in one of those two zones, guys, because the bulls are very strong, and there's a lot of macro tailwinds for Ethereum as well, such as the entire banking network, or a lot of the banks moving their back end into the stablecoin, or rather using stable coins for their back end. So the way that I'm playing Ethereum is, yes, accumulating a little bit here, but I am saving a lot of buying power down here, and here below is where we should be looking to maybe sell some put options on your favorite Ethereum proxy products, whether those are ETFs or names like BMNR or things of that nature, right? Now that's everything for our overall market rundown. Let's jump into big tech, and then we'll get into the biggest gainers and losers. So first taking a look at Apple real quick. Apple down 1.64, but Apple at one point today, man, was down like 2.7. Now, just a little bit of a retracement. We know Apple's been doing really well with their iPhone sales. iPhone 17 Air is sold out in China. The lead times, or otherwise known as back order times, are about 3-4 weeks for any orders, and they're really doing a good job of selling out their phones in most end markets. The bulls are now in control of this move, and we are looking for a bit of a daily higher low. Anything above 245, looking for the daily higher low for possible further trend continuation. Of course, right now we're using all of these guys as kind of a back test of support. We will see if Apple can keep it up into their earnings next week. That being said, the weekly time frame is looking very strong. However, we did hit a take profit target at a new all-time high for any buys that were made down here, or lastly made down here. This was the take profit target. So hopefully you guys are able to lock in a lot of those juicy profits, as we did call out those trades a lot on the channel in that area down there, the lower 200s. As of right now, even if Apple is doing really, really well with the iPhone 17 release, we have to focus on valuation. And around 250, guys, is trading at a 3.26 peg and a 34 forward price to earnings. So the company is just a little bit too expensive for me to be chasing moves to the upside for swing trades and or for long-term positions as well. Moving on to AMD right now. AMD down 3.28%, but it was worse. They were down over 4.5 over the course of the day today. It's still a nice daily uptrend. However, one thing happened today, guys, right? And we'll see if they actually run with it tomorrow. You cracked your line in the sand, 227, right? Daily higher lows, looking for the expansion, engulfing move. So the daily uptrend is in jeopardy of being lost. Equal highs and now lower lows, right? If you lose this any more than that, you will be heading into the infamous weekly consolidation phase for this stock, which would just be very healthy after the huge OpenAI deal push, of course. This one may need to consolidate a little bit. The RSI on the weekly is still up there at about 70. Now, that being said, valuation in around 240 where they are right now is not terrible, but we can't say it's cheap anymore, as we were kind of saying back here before this move even started. It's currently above a 2 peg right now on a forward price to earnings of 62. That being said, the business is looking really strong, right? Really strong into the next few years. Look at this EPS push, big EPS push into 2027 and a huge revenue push into 2027 as well. I like AMD stock a lot, but there was a time to be buying. And in my opinion, that time has unfortunately passed. If we're buying here, we really have to have a super long time horizon, 27, 28, 29 to justify buying up here and going for those compound annual growth rates, right? Because you probably will not get as good as a compound annual growth rate as some of us that bought down here or lastly bought over there. Moving on to Amazon right now. Amazon down 1.84%. Not the worst day for Amazon, but still a day of consolidation. That being said, we are still waiting for the bulls try for a daily uptrend attempt. The bears have been in short-term control of this stock largely since the beginning of September, and it's just been downward bias ever since. So we'll see if they have it in them. Line in the sand is still down here at about 211. Can't crack that or the daily downtrend continues. Good thing we got a lot of support down there though. 200-day EMA and 212 down to 206 is the support area that the bulls are seeking to defend. That being said, Amazon has earnings next week. So I don't think we're going to see a massive breakdown of the stock or a massive retest of the all-time highs much before earnings. So keep that in mind. Amazon is still one of my favorite buys in the market right now. All lines of business are performing really well, and around 220, the valuation is still very manageable. Moving on to Google right now. Google up about 0.47%. Not the worst day for Google, but of course, the big highlight of the day was that quantum computing news. This one right here helped keep the stock in the green throughout the day and never really looked back since. That being said, the bulls are not looking terrible, but the daily higher lows are set at the lows of yesterday, 246 roughly. So one thing you don't want to see is the bulls lose this. That will be the start of a new daily downtrend and a bit more weekly consolidation. Line in the sand on the weekly is down here at 237. Now, if you ask me my opinion on Google, same as Amazon right now, same as all the big tech names, I don't think we are going to get crazy breaks for new all-time highs. And I also don't think we're going to get crazy breaks to the downside much before earnings. I think people will wait to position to see the earnings as they only are on next Wednesday. And there's not too many trading days left before then. Google right now at 250. Is it a buy? It's not bad, guys. 1.73 peg and a 26 forward price to earnings multiple. That being said, in terms of the timeframes here, it is a little bit extended on the weekly, although they have been consolidating for a month and a half at this point. And even on the monthly, right, it's a little bit extended. So if there is an earnings drop, which would be surprising, but if there is, you might just find me participating in Google a little bit more than I have been in the most recent few weeks. I haven't done anything on Google since down here, man. I got all my leap contracts down there. We took profit on a lot of them. And also, I haven't been playing the wheel since down here. So maybe if they drop a little bit, maybe I'll be able to do one or, either further call options or possibly some wheel trades. Moving on to Meta right now. Meta, not too bad of a day, just flat. They're trying to crack above this good old 730 line, which was defense, support on the way down, resistance on the way up, and prior all-time highs. So there is something here, right? It's not the biggest level, but there is something there. That being said, the bulls reacting nicely from support last week, 705 down to about 680. Not looking too bad, but similar to the other big tech names, they have earnings on Wednesday. So what I'm not expecting on Meta is a crack of this big support range, but I'm also not expecting a break of the all-time highs much before earnings. I think it's just going to be wait and see on Meta. And as a result, I'm not really positioning for any new swing trades into their earnings. I already have one that we bought down here. And now we'll see if we can actually get the follow through or whether or not we will have to readjust. If we do come down, though, I'll be a big fan of buying some shares as Meta around 710 does have a pretty fair valuation in light of their forward growth. Moving on to Microsoft right now. Microsoft up 0.56%. Microsoft actually tried to crack the range, and they did crack the range. The bulls trying their best to go for the new daily uptrend and set us up into a very nice earnings release next Wednesday. But I said this for a lot of other stocks, and I'll say it for Microsoft as well. I don't think we're going to test the all-time highs before earnings, but I also probably don't think we're going to flush 500 by much before earnings as well. So keep that in mind. Microsoft is just kind of chilling here in this very tight accumulation range for the past 5 weeks. Earnings is going to be make or break for this range, in my humble opinion. Am I buying more Microsoft at 520? No, I spent all of last year buying Microsoft down here in the low 400s to high 300s. And right now I am full. That being said, Microsoft's valuation up here is also quite expensive. So I'm not really interested in buying more up here. Netflix down 10% today, almost losing the last line of defense that we built in April and almost losing the 200-day EMA. Of course, this goes down 1155 to about 1113. They spent 2 months in this range, and sadly, earnings was the catalyst to undo absolutely everything. So now the short-term bears are in control. The weekly bears are also in control. This is a weekly downtrend, unfortunately, for the company, right? Clear weekly downtrend at this point. And your next line of defense, if we crack through here, there's not much, guys. There's not much until like 1,056. And then these guys down here at about 1,000, right? So that being said, I was talking about it yesterday, and now you get to see the follow through for the monthly consolidation. And we might just be coming into the 12 EMA, which is going to be my next buy zone on Netflix. I mean, here, I've been very clear. This entire past 4 months, I was saying if I can find Netflix 1,100 down to 1,000, this little pocket right here, that is when I will be accumulating a few more shares because it's around the good old monthly 12 EMA, something that Netflix bulls really enjoy playing off of. We covered their earnings yesterday on the channel, so if you haven't seen it, definitely go have a look. Decent earnings, in my opinion, very good earnings. Moving on to NVIDIA right now. NVIDIA down 0.5%. We almost lost the line in the sand, guys. 177.43. I mean, they cracked it by a few pennies, but nothing meaningful. So I'll give this one to the bulls. We're still trying to protect this 180 area of support, prior resistance, current support for the markets. If you get another red day like that tomorrow, though, guys, that is definitely downtrend and definitely just a continuation of weekly consolidation, which could lead us right into here, 170 down to 165, which is the larger area of support that the bulls have built over the course of the past 3 months of trade. That being said, we are just in weekly consolidation and arguably also just a bit of monthly sideways action too. At 175, NVIDIA is actually not that expensive at all. It's a 1.71 peg, really not that commanding of a valuation for a company who has sold out everything for arguably the next 6 to 9 months. Essentially, next week we have a lot of big tech names, and I do believe that the big tech earnings, especially reiterating the guidance for CapEx, is going to be good for NVIDIA, right? So NVIDIA's been slow, NVIDIA's been a bit soft recently, but I do believe NVIDIA does have it in the cards for over the next 6 months to build on this rally and start pushing above the good old $200 level. Moving on to Tesla right now, we covered them earlier, but just to reiterate, in terms of the price action right now, with the earnings slide, you will probably be breaching or very close to breaching the areas of support that we have built over the course of the past month of trade. If you do come down into here, 405 down to 385, that's going to be your very large area of support, guys. It was a challenging area back here. It was your prior all-time highs in 2021 and 2022. I do believe the bulls will have a good chance of defending down there. If we make our way into there, it could be very interesting for some short puts down here. selling some short puts, especially with good volatility, and or maybe just building some shares and some swing trades for a possible next rally leg higher on Tesla, which will, at the end of the day, be benefiting from rate cuts into 2026. Moving on to Palantir right now. Palantir down 3.32%. At one point, Palantir was down over 6.5%. They almost lost the support range, guys. 172 was the line in the sand, cracked it briefly, and now back within the confines of the range. So we'll keep an eye on Palantir, guys, but a few more days like that, if you crack it, daily downturn underway, and sadly, weekly consolidation simply continues at this point. Now, Palantir's been doing a good job of consolidating sideways without much downside bias, and the 12 EMA has caught up on the weekly, and the bulls usually have defended this one for a better part of the last, let's call it year and a half. However, if the bears prove to be too strong, where we might be heading? Well, you might be heading down here to the good old 150, 140 area, which is your next area of support and could be very nice and interesting monthly consolidation into your monthly 12 EMA, something that doesn't often get tested, but usually does get tested when your overall growth narrative is soft. Moving on to SOFI right now. SOFI down about 5.5%, but at one point today, it was down almost 8%. Very choppy and volatile range by SOFI. I'll remind you, SOFI has earnings next Tuesday, so I'm not expecting SOFI to blast through the top before earnings, but I'm also not expecting them to blast through the support range down here, which is 24 down to 22. Very solid support range indeed. That is the highs from 2021 and 2022, and was a challenging area for the bulls to get through in the first place, right? So SOFI might just be on the back burner for the next few days, meaning we might not see much action in terms of big breakouts or big breakdowns. The favorite way that I enjoy playing this is selling puts under the market, especially down here 23, 22 and less. You can find some fantastic premiums for next week for earnings if you wanted to position prior to the earnings. I never recommend positioning into earnings, but if you wanted to, just for some context, I found some $20 short puts today for about 16 cents for next week, which is pretty good, man. For earnings, I wouldn't mind picking up some shares of SOFI down there at 20. I'm not saying they're going down there. I'm just saying there are some trade opportunities for some short puts all the way down there because the VIX is high on big red days like this. Moving on to Uber. Uber down about 0.88%. The bulls still desperately trying to defend this 93.5 to about $90 area. That being said, the short-term bears are in control right now. We will see if they flush. If they do flush, I mean, keep in mind Uber as well, as earnings in about 2 weeks' time. If they flush, guys, you know what I was saying in the last few weeks, right? Big move up, small retracement. Nice move up, bigger retracement, biggest retracement. So in the event we start rolling over here because we are losing this 12 EMA short-term momentum, right? In the event we roll over in earnings, we will just be looking for some monthly consolidation for the stock, and I will be very interested in picking up more Uber down here in the low 80s and even playing some short puts down there as well. So it's not looking the best. You know, you can make an argument that there is a swing trade here for continuation longs with a stop loss below this guy, 89, and going for the continuation of the weekly uptrend. This is true, but you can't negate the fact that the bearish bias has been building throughout this expansion move, right? We're now looking a little bit bearish here in terms of the lean. And if we do come down here, it'll be a great opportunity to tag a larger area of resistance, which will be support and the infamous monthly 12 EMA, with Uber's valuation sub 90 being very attractive. Moving on to TSM lastly. TSM, man, 1.91% to the downside. What did TSM do other than post fantastic earnings last week? They didn't do anything, but it just goes to show you, right? There's a lot of reluctance to bid up these names after they've ran a tremendous amount. So TSM going into a consolidation phase, arguably similar to the one that they had back there. Pay attention right now, guys, because the line in the sand is 280.52. The bulls had a nice move, right? Continuation of the daily uptrend. And now we're unwinding everything. This is a very big retracement. So we'll see. Maybe they can build some sort of a price range here. But if you flush this, it's not going to look good. And it's also going to be big weekly consolidation. The next area that you might be targeting would be 265. A pullback to there would just be very logical in terms of normal price action on the weekly. Cool down some of this weekly overbought RSI and also a bit of a monthly pullback as well. The candle closes in about 8-9 days. And when you close a candle like this, man, it leads you to believe that there might just be some consolidation that might just be coming for the stock whenever we close similar types of candle like this, right? It doesn't mean you're going for the big flush. It just might mean a bit more sideways or downside directional bias for the stock. That being said, around 290, there's nothing wrong with TSM. The valuation is still very manageable. However, if we're buying up here, right, this is when the fundamentals and the technicals don't line up. The fundamentals say that it's still cheap, but the technicals say that it's ran a little bit too hard, meaning there's no problem buying here if you have a very long-term time horizon in terms of a long-term portfolio, but you need to be willing to DCA on the way down as the technicals get a little bit of breathing room. So that was everything I had for you guys for the overall market rundown. Hopefully you enjoyed. Now let's get into some really fun stuff, the biggest gainers and losers of the day. Okay, so moving into it. So these names continuously are getting absolutely rinsed, guys, right? It's very, very tough. First thing that I'll mention, it's very tough to determine when this is going to stop, right? This is big, big, big institutional selling and retail capitulation at this point. Some of these names are down huge in the past 6 trading days. Look at Oklo, down 41%. Sometimes it takes some stocks a year to go down 40%. These ones are very volatile, and I do not suggest playing them if you cannot stomach the volatility as such, right? So Oklo is one, SMR is another one. I am playing SMR down here at the $30 strikes. The best way to possibly play these, if you want to play them, if you want to position into some possible support levels upcoming, the best way to do that is using selling put options, right? If you take a look at SMR right here, you'll see the premiums are through the sky right now because of the volatility. If you take a look here at next week, you can go all the way down here, guys, right? October 31st, you can go all the way down here, $25 strikes, and get 0.5% or even all the way up to 1%. You do not have to play these too close if you do not want to. Do not get seduced by the premium because they're moving like 7, 8, 9, 10% a day, and it's tough to determine when they're actually going to stop because right now it's just relentless selling, right? Even a company like SMR from the top here, down 40, 42% in just 5 trading days. So be careful with these plays. Something similar with these companies, right? And I'll include ASTS, I'll include Rocket Lab in here, I'll include other names such as NBIS, names like Iris Energy, right? And even names like CoreWeave. A lot of these companies, guys, right? This whole AI, the neo cloud players, some of the energy plays, a common theme, and even some of the rocket names like ASTS and Rocket Lab, a common theme here is that these companies do not have meaningful revenues much before 2027 and 2028. What happened here is a whole hype cycle, right? But I'll remind you, if you go into the fundamentals, yes, they've signed very good deals with very large corporations, but they have to build out for those deals. And that takes time. If you take a look at Iris Energy, yes, they'll be making good revenue next year, but the bulk of it does not come much before late 27 into 2028. So essentially, we priced in a lot of growth very, very rapidly. And now we are currently seeing the unwind. So yes, even on a company like Iris Energy, you have some short-term areas of support to be playing off of, but nothing substantial. If you take a look at the weekly time frame here, this is just too much too soon, guys. Way, way, way overblown on the RSI right here. And I was warning about this coming into the top end of the move. And now it's the bear's turn, consolidation mode. So you have to wait to see where they're going to stop. It serves no purpose just guessing. Oh, they're going to stop here. They're going to stop here. They're going to stop here. We're not even oversold on the daily time frame, not even close. So let the bears show you if it takes one leg, if it takes 2 legs, if it takes 3 legs before establishing an area of support. Wait for them to show you where the bottom is. Until that time, if you want to play the volatility, the best possible way to do it, in my opinion, is playing some short puts if you do not mind being assigned at that strike price. If you want to buy the dips, right? There's a way to do it, and a way to do it very logically. If you take a look down here on Iris Energy, you can go all the way. Look at these premiums, man. They're nuts, right? You can go all the way down here to the 38.5 strike for next Friday, which would be an additional sell-off. I know they're dropping fast every day, but by next Friday, that would be an additional 26% from here. And from the top, that will be a whole down move of about 50%, right? So if you're looking to buy the dips on these and position as we move lower, you can contemplate using short put orders. And that has to do with all of these stocks, right? So just try and target some of the areas, right, that do prove that there was some price action down there. And that's the best way to do it, in my opinion. Same thing for Symbotic. Symbotic, we should be targeting down here for some short puts. It's the closest area that we have. BMNR is not the worst bet out there, but has gotten crushed as well as part of the growth trade. And the fact that Ethereum has been relatively weak. I do enjoy BMNR from 45 all the way down to the low 30s. Nice accumulation range if you also get down there. Oscar Health is another one that pulled back tremendously. This one I'm a big fan of selling some short put options down here. 18 to 17, batch number 1, and batch number 2 would be 15 in the event you can find it. And you'd be surprised, man. you can find some really crazy trades on these, especially using short puts, right? If you're looking to build out some positions for next week, the 16s are offering 10-15 cents. That's not terrible. From here on Oscar Health, that would be a sell-off from 20 to 16 in 1 week. That would be 21%. So you can see the amount of distance that you're getting, but a lot of people, unfortunately, will be seduced by high amounts of premiums very close to the strike. If that is you, do not be surprised if you get assigned in a whole bunch of positions really early because you're getting seduced by the premium. You're playing the market too close when the market is not showing you that there is a temporary local bottom set on these names just yet. I do enjoy a lot of these names, and a lot of these names will be making a lot of money, but not right now. So wait for the bears to show you where the bottom is, guys. It's always the same thing, right? If you can't even get the 4-hour uptrend back, well, we can't even think that the daily move is done just yet, and we can't even think that the weekly consolidation move is done just yet either. And if you ask me for my levels that I enjoy on some of these names, Iris Energy sub 40 is not that bad of a deal. NBIS back towards the Microsoft area deal, right? Back towards down here, low 90s. Not that bad of a deal, but you have to prepare to be able to DCA into these trades if they give the full unwind, right? They ran way too hot, pulling back into some EMAs, and you can see we reacted today from the 12 EMAs. We will see if we can establish a price range from here, or if we have to go a little bit lower to do that. You have to wait for the sellers to be exhausted, and you have to wait for the bulls to build a little bit of an equilibrium area of support. APLD, I'm a fan, a little bit under 25, and then the next batch would be down here at 20s. You can get some really good distance on these strikes as well, but it needs to pull back, guys. This whole area is area number 1 for some price action. Big area number 2 would be the bottom end of their 20. So I'll be building some positions here and into here as well on APLD. A lot of the names getting crushed. We covered Texas Instruments yesterday. We went over most of these names, but most of them have some common themes, right? They ran a lot. Now time for pullback. Tempest AI, I'm a fan down here, 70s. And even ARCG playing this genomics rally a little bit. If you pull back into here, 27 perhaps, you might find me establishing some longer duration swing trades, maybe some leap call options to go for the good old push into the high 30s and 40s. But these narratives will take some time to rebuild momentum to the upside. So please keep that in mind. Companies like Reddit have earnings next week, so we can't really spend too much time on them. Next line of defense down here, 170 to 155. It's going to move big on earnings, man. So I'm not positioning on a lot of these that have earnings. HIMS, I do enjoy down here, sub 40. 40 all the way down to roughly the 30s. It's a big area for HIMS. I know people don't want to hear that it could unwind all the way there, but anything is possible in this market right now. They're just tossing around these names as if the buyers aren't even there, right? From the top of that HIMS move on the menopause news, it's down 29% in 5 trading days. So the volatility is definitely present. One of the names in cybersecurity I'm looking at is Rubrik. I think this setup is gorgeous in my opinion. Looking for monthly higher lows down here, 70s, low 70s down to about 63. Decent area to be building some positions on Rubrik, especially if you're going for the fundamental thesis expansion into 2026, 2027, looking very good. Robinhood as well took a bath today, guys, right? They were down over 6% at one point. I mean, daily downtrend, the bears have it now. Daily downtrend, looking for a bit of weekly consolidation, healthy consolidation. Higher lows are down here, 96. So we can pull back a bit lower into the teens on Robinhood, and you would not be surprised. The timeframes definitely look like they're lined up for that. And even your monthly RSI, man, it's curling over right now. So in the event you get the full crush down to 100s, nobody should be surprised, right? The 12 EMA is going to be catching up. This name has ran an absolute ton. It is overvalued, and as such, it's being lumped up into some of those names that are just getting crushed recently. So hopefully you guys understand when you're looking at these names with all the volatility, how you should best try to position. CoreWeave is another one on these big volatility swings and big volatility drops into support levels. We can get some phenomenal price action down here for some short puts if you're looking to pick up some CoreWeave or just play it with the volatility and make some money selling some short put options. I mean, look at the premiums on some of these contracts, right? For next week, you can go all the way down here to the hundreds. Look how high these contracts got throughout the day, $2. So this week, you could have got even lower for next week. You could have went all down there, all the way down there to the 90s at the peak of the day, and they were paying 65 cents. That's like 0.75% for a week of trading with a huge margin of safety, right? We were down here at that time, 115 to 90 in a single week. That's like another 22% down into the second area of support. So that is my favorite way to play a lot of this volatility, right? Just try to play it under the market as much as possible. If you guys want to accumulate some small shares on these drops as well, you can do that. And to fund some of those purchases, or a small portion of them, of course, we can sell puts on the way down. Not the worst thing, but I will be looking to maybe build some sets of positions out on some of these names, NBIS, et cetera, et cetera, et cetera, IREN, as they kind of move into the lower levels. But that, guys, is pretty much everything that I had for you guys today. I mean, I guess we can cover some of the biggest winners, right? ISRG, solid move after earnings, becoming into resistance, 550, down about 521. This one is gone, 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 gone. Eventually, we might see, a little bit of a gap fill, but I'd be highly surprised if they go for the entire move down. ISRG, one of my favorite companies in healthcare. It's actually my only healthcare play in my long-term portfolio because of these main competitive advantages. Very solid market share, extremely solid technology, and the time to train the surgeons on these devices means that it's really tough to replace the products with something else once they're trained in those Da Vinci machines, essentially. So very strong move. I like this company a lot. I don't talk about it much, but it is one that I'm holding for the long term. Hilton had some nice earnings today. Maybe we'll have some time to cover, but they cover them tomorrow. They had really good earnings, show that travel demand was still excessively strong. Not so much inbound towards the USA, but their worldwide markets are doing phenomenal. As a result, you're seeing a nice little push here on Hilton and some of the other travel names today. Travel, we know, has been very strong. We heard from American Express last week. It was one of the highlights of their business as well. DraftKings moving a little bit higher. Not a bad bet for some short puts in this area. Nice support for a better part of the last 2 years. The reason that they were moving higher a bit today is because they acquired a predictions market. So maybe you'll be able to place prediction bets similar to Poly Market, right, on DraftKings moving forward. RTX and some of the defense corporations moving higher after their earnings yesterday. Very strong, but very tough to position up here. And then you have a bunch of very boring names, right? Names that I like to play with my large account for the wheel. Waste Connections down here, decent bet, but my favorite one of the two is Waste Management. Waste Management, phenomenal setup here, guys. This is monthly consolidation, right? Very boring company. Very boring company, but has its place in a somewhat defensive portfolio as well. Then you had some names like Nike. Nike is still a decent bet down here, in my opinion, guys. Buying some Nike shares or possibly some leap call options with some defined risk into 2027 expiries. Not the worst opportunity out there in the world for Nike. And then we obviously had some of the defensive plays coming up. Walmart holding up really well, and Costco. Costco, in my opinion, is a decent bet down here in the low 900s as the company just continues to consolidate over the course of the past year and kind of grow into its very somewhat rich valuation. You can argue that it deserves that valuation, and I would agree. But then again, it is kind of just hovering in, rather, you're just accumulating some positions right here. This Costco move reminds me eerily of what happened in 2022 and 2023. It's almost the same setup, man. You know, high, higher, high, lower, low, and then consolidate. High, higher, high, lower, low, and then just consolidate. So I'll be looking to accumulate more Costco shares in the low 900s if they do give me the opportunity. And that is pretty much everything for today, guys. So hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Second, consider subscribing if you're new, guys. We're almost at 10,000 subscribers, a big milestone for me. I would really appreciate it. I don't ask for much, but I would really appreciate it if you hit that subscribe button and get us closer to the infamous 10,000 subscriber mark, right? So we're going to be very excited when that happens. Lastly, but not least, if you have any questions, feel free to leave them down below in the comments section. If you are playing some of these pullbacks and you want to inform others of how you're playing it, I'd love to hear from you. So any comments are always welcome. I'll do my best to help you guys out for any trade setups if you guys ask the questions. And last but not least, if you guys are tired of trading and investing in the markets alone, well, you might consider joining our trading and investing community. In the community, you get access to a whole bunch of stuff. Number one, you get access to all of my trades in real time, whether those are the wheel trades that I make on a daily basis, the call option trades, the leap trades, the call debit spreads, the swing trades with shares. Everything comes included in the Discord, all of my trades, and also all of my long-term portfolio buys, which I don't talk about enough on the channel, but I do talk about them almost every single day in the Discord. Here's just a lot of our trades that we've been making over the course of the past couple of months. The green little circles are wins. The small little the green check marks are wins. The red little circles are losses. Obviously, we like to keep our wins much more frequent than the losses and much bigger as well. That's how you should be trading, of course. So here's a lot of our positions over the past few months. You also get access to our private morning live streams every morning, Monday through Friday, where I trade the markets live, but I also take all of your questions on your stocks, your options, your long-term portfolios. It's a great place to interact with me and ask me your questions directly. You can also ask me all your questions in our chat rooms all throughout the day, and I'm very fast to answer. You also get access to our education section. That's where I have all my educational videos on technical analysis, fundamental analysis, option strategies, how to grow trading accounts, how to build long-term portfolios, and so much other educational content. There's like 15 plus hours of educational content in there. Our members enjoy that a lot. And last but not least, you get access to all of my charts and all of my watch lists whenever you guys see support, resistance levels on the chart, earnings breakdowns, fundamental breakdowns. You can just copy paste all of my charts, hundreds and hundreds of charts, and all of my watch lists that I use to trade the markets every day. It's just an added bonus for our members. Super easy to do, like 15, 20 seconds, and you just copy paste everything. That being said, if you enjoy any of that, you can consider joining us by using the link down below in the video description. And if not, I guess I'll see you back here on the channel, guys. That's it for me. Hope you had a decent day. I'll see you guys tomorrow after the close. Peace.